Hey, what's up? My name is Benjamin, owner of Forex Hermes. Hope you're having a great day. I'm having a great day. Because today on Instagram, I actually announced that I will start doing Bento Box Analysis, which is something I've been researching for freaking 6 months. And that's been forward testing as well as research. And also I did 2.5 months worth of back testing. Okay, so I did a lot of research. I put a lot of work into this and it's paying off big time. So today, I have my phone right over here with the calculator. I'll be going through trades that happened on Friday, and I know that hindsight is 2020, but I'll be going through my emotions or how my emotions would have gone if I was in the market. At this point, Friday, I was still using my demo, but starting from Monday, I'll be using my live account with it because I've seen with my demo account that I've been profitable for over 201 trades. Okay, so if you're profitable over those many trades, then I feel like it's time to go live with it, you know. And when I say profitable with 201 trades, I don't mean 201 trades that I've gone into profit. It just means that I've won more than I've lost. Pretty much that's it. Okay, let's go into the analysis. Okay, so these lines I've already drawn because the bento box, I just work with the highs and lows of it. Okay, that's easy as that. Nothing complicated, no crazy indicators. The only indicator that is on the screen right now as we are speaking is the bento box and my position size calculator. That's the only indicator, because the bento box is pretty much time based, right? And that's how the bento box works. So the bento box squares are pretty much amazing, and rectangles that lay around the horizontal axis, perfect. So tall, bad. Short, great. Very simple stuff, right? So it failed to break the low, so price went to go break the high, but it didn't break the way I wanted to break. This over here would have sketched me out, okay? I wouldn't have liked it. But I saw price move a considerable amount away from the line of the bento box, and then I saw this. Now what I do with slow moving currencies is I give it 1 to 1.5 pips of leeway for rejections. Not for candles to close, but for rejections. So where did this fall? This fell in about the 1.5 range, right? So I would have my alert at the 1.5 range, but if it falls even closer to the line, even better, right? More probability for me. This does show indecision, but it shows rejection as well. I would have taken this, honestly. I'm not just saying that because I see the market, you know, but that's how I would look at it. By the way, my analysis will be very unprofessional and very raw. That's just the way I talk to myself, because these analysis videos are going to be like I'm talking to myself, just in the third person, pretending like there's someone at the other side of this camera, you know. So 4.5 pips stop loss. So then we're going to be looking for, you know, about like 12 pips, maybe 13 pips to get that 1 to 3 risk reward ratio. That's the perfect number. Number 3, my favorite number. It has been my favorite number since I was born, honestly. So having that, you know, in trading is just amazing. You feel me? So I got that. That's a take profit, right? Let's make it 5 pips, just to be safe, right? 5 pips. We're looking for 150 points, which is 15 pips over here. We got it. Take profit over there. 15, 30, 45 minutes you would have gotten take profit. This would have happened when I had dinner. I have a alert that I put on, which you can easily do just by doing that and entering in, you know, the level. So you would look at the levels that the MT5 shows you, right? Now I'm on MT5, but I will be doing my analysis on TradingView, so just go follow me with the link in the description. Okay, so that's our first 3% of the Friday. By the way, this is one day. We're on the 15-minute time frame right now. 3% locked in right over there, if you can see that. I'm not going to be going back to this screen because I sometimes forget to go from this screen back to the analysis screen. 3%, price never came back to show any more opportunity, which is fine. Normally on Fridays, price doesn't do that. So let's move on to the Canadian dollar JPY, but let's first just move this like that. Bento box. I love the bento box. It's amazing. So for some reason, the bento box isn't loading in, so let me just load up the bento box again. There we go. Cool. I just need to reset the chart real quick. There we go. Awesome. So that's the high. That's the low. Let's see what price did. 1, 2. Actually, just 1. Sorry about that. Okay, so price rejected, went up. Because if price can't go down, price will go up. If price can go up, price will go down. This is a range right here. Okay, and price ranged quite a bit. Fridays, I'm used to it. I'm used to it on Fridays that this happens. Okay, but look at it. It broke over here. Can you see that? Yeah, it broke over there, and then immediately it broke down. What is that called? Fake out. Fake out is how the institutions gather more steam to head to the upside, right? So let's look at this. This is a let's call it a 0.21 change in price. This whole fake out right here. This is an entire fake out. Why? Because they need momentum to the upside. They're getting all of your stop losses. All of your stop losses, they're getting them. You know, because if you are a retail trader and you are a breakout trader, you know, you'd see this and put your stop loss below there, maybe even there, maybe even there if you're very, very conservative, right? With me, I'm the sweet spot between conservative and aggressive. So I give myself, you know, these pretty breathable stop losses, but they aren't too big nor too small. So yeah, so 0.20% change in price versus a 0.52% change in price, more than twice the change here, because they took out all your stop losses and now they move into the upside. Okay, that's how these institutions catch you out. Okay, and the Bento box does help me evade a lot of these breakouts, these false breakouts. However, it isn't 100%. I would say that out of 10 fake outs, it'll get me out of 8 of those false breakouts. Okay, because there are going to be those 1 or 2 scenarios where, you know, it doesn't help. It doesn't help that your Bento box is there or anything like that. Okay, and if you are Japanese and you're getting hungry right now, I do apologize. Or if you understand Japanese and you're getting hungry right now, I do apologize, because bento, you know, it's food. It has to do with food and whatnot. So yeah, but price broke, moved away from the high of the Bento box and came down, rejected. And even though with me, I like having bullish rejections for buys and bearish rejections for sells, I see this as a very nice, you know, rejection. The wick itself is bigger than the body, so we would definitely get in there. Stop loss below, that's 40 pips. We're looking for, not 40 pips, that's 4 pips, which is 40 points, and then we're looking for 12 pips, which is 120 points. Okay, which we will get over there. And that would happen within 1, 2, 3, 4, let's say 5 candles. Okay, 5 15-minute candles, which is some time, but honestly, if you go in from 5:30 to 6:30, between 5:30 and 6:30, a lot can happen. Okay, a lot can happen. You're probably busy with stuff, you're watching a YouTube video, and boom, you hit take profit for 3%, right? So that's another 3% we can add. That's another 3%, and I'm happy, right? I'm happy. Look at that, 6% so far. Okay, so with these fake outs, I want to talk about something called 2LR. What the 2LR is, it's a 2-loss rule that I use with the Bento box. What's pretty much what it states is that if I make 2 losses, that's it for the day for this specific pair. So if I make 2 losses on the CAD, stop trading CAD for the day, and just focus on the other pairs, right? But the way I trade is I have all 6 of them up like this. Okay, that's how I trade the Bento box, because the Bento box will show the levels, and I'll have these levels end. So all I have to look for is these pink lines being violated, pretty much. Okay, that's easy as that. Make your life simple. Okay. So 2LR states that if I make 2 losses, stop trading the currency pair. Why? Because if I take 2 losses, that's minus 2%. The next trade I take, if that is a win, I make 3%. 3% minus 2%, that's 1%. I'm above break even. Okay, so I've made back a loss, right? That's just pretty much covering my losses, because the first thing I come into this market with is how am I going to stop myself from losing? How are my losses going to be minimized and my wins be maximized? And exactly with that, you see. So let's go to Euro Japanese yen, because we're done with the CAD Japanese yen. We won, right? Because I take profit. 1:3, 3%, easy, right? So let's look at this. I hate and love this currency pair so much because when it gives you a signal, it's either going to be amazing or it's going to be trash. Like, honestly. So let's look at this. Vertical rectangles are the worst bento boxes to trade, but I will trade them if I see them, especially if I get a good stop loss. Reason why is because your stop loss is going to be big, and pretty much with the vertical bento boxes, it just means that market is very, very volatile. Okay, and you want to stay out of extremely volatile markets, but stay in markets that are volatile enough for you to make money. So our first break of the bento box line shows us that there's not enough steam for the upside here, even though it is close to the line. How close is it? So EURJPY is fast moving. I would give it 2 pips of moving room, right? It did reject, but look at how it rejected. There's more pressure to the downward section of this chart, right? If price was like this, if you saw price like this, right, without seeing the next one, you would know that, you know, if there's a rejection, the opposite's gonna happen. You see? So that happened, fake out, right? Now this is a very, very deep fake out, but I feel like the EURJPY just wasn't functioning for anyone, unless you were like, you know, scalping with a different strategy that uses a lot of indicators, or just a robot, a EA, right? So I would have taken 2 trades. I can already see those 2 trades. 1 trade over here, 1 trade over here. They both would have been losses, right? But they're only going to be 1% losses each, which amounts to 2% losses. Then I would have just folded my hands and just done nothing. All right. Why? Because it broke and it rejected. Now it comes back to that whole thing I was talking about, that I like my bullish or my buys to be caused by bullish rejections and my sells to be caused by bearish rejections. This is a bullish rejection for a sell. Okay. So let's call it a 5 pip stop loss. Boom, 1% gone. Over here, price broke, price came down. I wouldn't have taken that because it wasn't really a rejection. But then price moved a bit higher and then came down to reject. And then even though you saw these 2 rejecting, you know, wicks over there, you would probably take it because now the next candle shows you that, oh look, you know, there is some bearish momentum. Psych. That was also a fake out. So as I said, out of 10 fake outs, I can like get out of like 8 of them, honestly. So yeah, that's 2% down the drain right there, but we aren't focusing on that too much. Okay, so let me just brighten up my screen so you can show so I can show you that I am minusing 2, right? -2. We are at 4% total percentage for Friday. Let's move on to pound. Okay, let me just make sure that the CAD and the Australian is back to normal. Okay, cool. Pound. I love pound because it moves fast, especially pound Japanese yen, aka the dragon. Now look at this amazing just rally up. I don't know why this rallied up like this. I don't think there was any news for it. I just think this was what the market was feeling like. But yeah, price moves very fast. You can get your take profit very fast, but also you can get your stop loss very fast. And once again, we focus on the fat and flat bento box, because you never eat a bento box like this, you know. Always eat it like this. It always looks like that. Well, for most people. So let's go and see what's up with these bento box over here. So same thing that happened with EURJPY happened here with this huge spike. Look at that. Copy and paste. What time was that? 11:15. This happened 10:15. So 1 hour after the euro pretty much showed us the same thing as the pound. Now, would I've gotten in? No, because there's no upward momentum. Okay, and this does come within my 2 pip range. So, you know, if I was just looking at the 2 pip range, I would have gotten in, but I would have gotten stopped out, right? But look now, fake out, break again, comes down, rejects perfectly. Now I could have gotten in here, but since the very bottom heavy candle, I wouldn't have gotten in there. I would have gone with this one, right? It's more of a pinball. right? So let's make it 50 points, which is 5 pips. 5 pip stop loss. We're looking for 150 points, which is 15 pips. Sorry about that. My words are just getting jumbled. I've been in front of the screen for too much. And we would have gotten that. So that's 3% right there. No hassle whatsoever. Within 1, 2, 3, 4, 5, 6 candles on the 15-minute time frame. By the way, I'm just repeating it so you understand. Okay. And that's thanks to the fat and flat bento box. You know, the bigger your bento box, the better, but it's better to be sideways than, you know, upwards. Okay. And there's no other positions we could have gotten into. So pound Japanese yen, we are now at 7%. Okay. And we can just go to the next one then. New Zealand Japanese yen. Damn, this spread is extremely big. This is why I like my time zone. I'm really happy for my time zone, because when I'm not trading, the spreads are widening like this. Like, how big is this spread? How big is this spread? Let's just see. It's a 6 pip freaking spread right there. I don't trade in this. This is when the spreads are the most, and then boom, your what you call it, your opportunities come in. So let's look at the bento box on a smaller level. So it is fat and flat. We love to see it. We broke, we came up, we rejected, but these engulfing candles, I stay away from it because it shows there's more upward momentum than there is downward momentum, because I see rejections as momentum, right? So this is downward momentum, but it didn't go down. And let's go for upward momentum. And if it rejects downwards, I'm just find a downward rejecting candle. That's upward momentum in my eyes, okay? But then there's an engulfing candle. So I would have stayed away from that. I would have stayed away from that because it closed within the bento box again. So that's kind of sketchy. But then it came back down, and now we wait. We come back up to this area over here. And you know what? I would have taken a trade. I'm going to be completely honest with you. I would have taken this trade. And I would have gone and stopped out for 1% loss. Then we would have come over here. Now, once price becomes small like this, let's see how small this actually is. Because it did reject the level. That's a 1 pip stop loss. 1 pip to gain 3 pip. It sounds crazy. It's possible, but I don't like that. It's too narrow. Okay, it's too narrow. It's too constricting. It's like a boa constrictor. It's too tight. It's gonna kill your account if you take these crazy trades. So I would have stayed away from this market, just because of that one fact. Okay, and then it just started to range. So I would have made a good decision. So I only lost 1% that day. I only lost 1%. So now we back down to 6%. Okay, now we move on to the final pair, which is USDJPY. Now I love USDJPY. This is where my most profits have come from. Most of my TPs have been hit thanks to the beautiful USDJPY. Okay, and plus I've been trading USDJPY for about 2 years now. Yeah, USDJPY I've been trading for 2 years, and Australian JPY I've been trading for 3 years. So I'm very comfortable with those two pairs. I know how they move. So here is the bento box line again, and as you can see, it didn't come exactly to the bento box line, but look at that range, that 1.5 pip range. It's perfect. USDJPY I would like file it under medium moving, so a 1.5 pip violation leeway, completely fine with me. Pound JPY I would give a 2 pip violation because it just moves. Okay, so if you miss the move, then you're out of the market. Okay. But look at that move over there, rejection. Obviously you're getting into the trade. 1 pip stop loss, I mean not 1 pip stop loss, but stop loss below. 5 pip stop loss with a 15 pip take profit. 1 pip, 1% to make 3%, and we would have gotten that 3% right over there. All right, and this is textbook right here. This is textbook bento box. I love that. So we add on another 3%, right? So price did come back to the bento box line, but It didn't come to that 1.5 pip leeway line that I put in normally. So at the end, let me close this out. At the end of our little session for Friday alone, you have made 9% with Bento Box on 6 different currency pairs rather. Okay, now this isn't gonna be every single day. Okay, don't expect this to be every single day, because you know the market changes a lot. You could have losing streaks, you could have winning streaks. There was this time on USDJPY, actually I had a 7 trade winning streak, and then immediately following that I had a I think 5 trade losing streak, but I was still profitable because from what I was winning, you know, those are 3% wins. I'm excluding the break evens. Break evens to me aren't seen as wins, they're still seen as losses in my eyes, right? But look at this, look at how beautiful USDJPY is. Look at that, it came back, rejected, moved up, and that's literally all you look for. It came back down for a fake breakout, broke back up. It had like a top heavy shape to it, but the next candle over here rejected, went up. It's just too easy with USDJPY, you know. So USDJPY I would say is my main money maker, honestly. USDJPY, GBPJPY, and EURJPY. If I could only trade 3 of these currency pairs, I would trade those 3. Euro I wouldn't trade that much, because you know the thing with Euro is it does this a lot, and I don't like this. I don't like when price is just crazy like this, you know. But when it does set you up, it sets you up for good, you know. So these are pretty much the Bento Box currency pairs. This is how you use the Bento Box. This is how I'll be analyzing the market. As I said on TradingView, I'll be doing it exactly at 9 over here. Okay, so as you can see, I don't know if you can see this on the video, but the line ends over here. The Bento Box line ends over here, the vertical one over here that makes this rectangle, and it ends over here. Here is where I make my analysis, because here I know the high and the low of the Bento Box, and then I see how price reacts to it, and then I'll post the before and after of it. Okay, and then that's pretty much it for the Bento Box, honestly. So I am very, very grateful that you came to just kind of like see, you know, how the Bento Box really is, what the Bento Box really is, and I'll be talking a lot more about the Bento Box. I think like my main thing I'm going to be talking about is the Bento Box, because it's just so simple. So let's look at this. 9%. Oh, you can't really see that, so I'm gonna switch to this. I'm gonna switch to the screen, right? My OBS doesn't really record everything, so I can't really open up my calculator on the PC. But look at this, 9% on a Friday, right? Now let's say, for instance, market is in perfect condition, and you do this every single week. That's 36% gain per month with the Bento Box if market conditions are perfect, just like what happened over here. Okay, however, market conditions aren't going to be so perfect, so what I look for, instead of it being 36%, I look for 26% less than that, which is 10%. 10%, that's what I look for, because 10% is really all you need. Every 10 months, you're making 10% every single month consistently. Every 10 months, you double your account. That's just how it works, okay? So once again, I want to thank you for coming through, for listening to me. It is a bit of a long video, 23 minutes. However, I feel like there's a lot of value that you can actually find within this video when it comes to these different currency pairs and how they move, you know? I didn't focus on one thing, which is, you know, the Bento Box. I focused on how the market was moving around the Bento Box. I showed you how EURJPY and GBPJPY show the same freaking candle. I showed you how, you know, CADJPY, lots of rejections, lots of wicks. That we can use it to our advantage. Old JPY moves slow, great for us though. Dragon moves, like the dragon moves. Okay. The New Zealand, I don't really. The thing with the New Zealand JPY, it's either real good or either real bad. It really depends on the day and how the market feels, because New Zealand is quite quiet and the Japanese itself is also quite quiet. it's really just a safe haven currency, the Japanese yen. And US, I mean the US dollar, come on now, come on. It's the one of the leading, you know, currencies in the world. You know, you have the pound, you have the euro, and then you have the US dollar in no particular order. That's the real ones I look at. Okay, euro not as much, because now pound is really a forerunner in my eyes. So yeah, that's pretty much my ranking system, honestly. But USDJPY, man, this has been coming from a long time. I'm really honest with you on this. Like, USDJPY has come from the times that I used to trade on the 4 hour with just pin bars. And a quick little bonus analysis for you real quick. Let me just wait for it to load. For some reason it's taking forever to load. I think it's because it's a Sunday and servers aren't really that up and running on Sundays. Very chill on Sundays, so there we go. Okay, cool. So what I'm gonna do, get rid of the bento box. Let me just refresh. Okay, it should get rid of all the bento boxes on the screen because the only thing I want to show you is this cool, oh, you can't even see I'm adding the damn thing. Okay, but I'm adding a moving average of about 20. It's a simple moving average, and I'll make it white so you can see it. Right now on the 4 hour, I used to trade USDJPY a lot. Wait, is this simple or no? Apply to close. Yes, it is. Okay, cool. For some reason I didn't think it was on simple, right? But I used to trade this over here religiously for I don't know how long. I lost it now. Let me go back until I find it. Okay, cool. There it is. Get rid of these lines. I think I'm getting close to where I was. I'm not really sure. That wasn't it. This was it, right over here. Okay, right over here I used to trade this particular pattern religiously. So what this pretty much is a pin bar, not really a pin bar, but anything with rejection on this, I would put my stop loss below it, and then I would just times the stop loss by 2 to get 1 to 2 risk reward ratio. I would trade that USDJPY every single time, and I was profitable with it, but not profitable enough to where I was comfortable, you know. So there were still some months that I would go into the negative, like strong in the negative, you know. But from then I used to learn so many things about, you know, the market, and now look at me, I have the bento box. I've taken my time. 6 months, man. 6 months is just too much for me not to have something as good as the bento box, you know, because some people, they just want to trade and stick to one strategy. With me, if I see something and I say I can capitalize from it, I go for it. Because look, you are in the ocean with sharks, okay? These institutions, they are sharks, and they don't give a damn about you, okay? They really don't give a damn about you. So where you're gonna shine is by having that same mentality, not having a victim mentality, not having a I'm content with where I am mentality, but also not going too far, because sometimes you'll research something that'll actually put you back. So I was lucky with this. I will say this loud and proud. I was extremely lucky with this. That I found something that is very, very just simple, but also very profitable. Okay, so as I said, starting pretty soon. TradingView, follow me, and you'll see 9 a.m. GMT +2. There will be around that time a analysis, right? Because look when this happened. This breakout happened 45 minutes after. So 45 minutes after I would have made this analysis on TradingView on Friday, this breakout would have happened. Then in my description of my TradingView thing, I would have actually said, you know, I'm waiting for a break of a level, and obviously, you know, a retest and whatever. And then yeah, easy, man, easy. So yeah, that is my main goal, honestly, with Forex Hermes. It's just helping people. But yeah, so I'm gonna end this video before I take up too much time. My live streams, because I am planning to do some live streams very, very soon, they're gonna be a bit longer. Okay, they're gonna be about like an hour or so. There might even be times where I'm gonna be in the Discord server 24/7. Okay, but that's only gonna happen when I have time. At the moment I don't have much time. I'm crunched for time 24/7 pretty much, because I have a bunch of other commitments pretty much. Okay, it's not just Forex Hermes I'm looking at my music, I'm looking at everything else, because I have side hustles with Forex and also a job and whatnot. So yeah, that's what's up. I like the idea of having multiple streams of income, because if you rely on one stream of income, you pretty much set yourself up for disaster, because if that income goes, then you have nothing to stand on. You have nothing to stand on. And I know a lot of you saw that, and I saw that firsthand, how people, with only one, form of income, they kind of struggled. They struggled a lot. Okay, they struggled a lot during this very, very hectic time. All you can do right now is just perfect what you know what you perfect, and just aim high. Don't aim too high though, because you might get burnt. Don't be like I think, was it Icarus, who flew too close to the sun? That guy, yeah. Don't be like him. Be smart about what you do. But yeah, so I'm gonna end it right over here. 30 minutes, that's a good analysis session. I'll try to do these sessions every Saturday, so I can have them up of the trades that I'm going to be taking. So throughout the week I'll be taking trades on my live account. There's no longer time for demo account. Demo account is cool, but I want to see how my emotions play out. So next episode, next analysis, I'll be probably talking about my emotions in real life market conditions. Okay, I'll start out with 1% risk. I might go against that though. I might go with 0.5 because I'm just getting used to it. But I'll think about that. Normally I ease into a trade-in method, but the way Bento Box is set up, the way I've been researching it, the way I've been back testing it, why wait? I think screw it. 1% sounds good. 1% sounds good. I'll go with that. And I know that I can afford to make 3 losses, but I won't make 3 losses because 2 losses is where I will cut it off. 2 losses is where I cut it off. But yeah, so I really do appreciate your time, and I value your time. So I'm gonna end it right over here. If you have not followed me on Instagram yet, do so, because I'll be uploading some more content over there as well. Some more just actually talking content. Here I'll be doing a lot of analysis. So as you can see, a lot of analysis. Yeah, pretty much just talking will be done on Instagram, to do with psychology, to do with just things that a lot of traders don't even talk about, because there's a lot of things that happen in the market that if you're new to the market, you don't even know happens, and you would think that when it happens it's unnatural and it will never happen again, but surprise, it happens again. And yeah, so anyways, thank you so much for your time. I appreciate you. Go make some money. Get ready to make some money, because it's actually a Sunday. You can't really trade right now. But yeah, peace out. Love you. Appreciate you. It's been Benjamin, one of Forex Hermes, and I'm out.